Thanks, Kat. Good morning, everyone. Welcome to this glorious day. As soon as the weekend is over, and the wonderful weather comes back, but we'll have you out of here in a short order. Hope we get some business to tend to. What we're going to do first is alter the agenda, and we're going to go with the last item first, the executive session with the search committee report. And I'll entertain a motion to enter executive session to deal with a personal issue. All in favor?
Aye.
Anyone opposed? Thank you. It passed. Good. Thanks, Kat. I will entertain a motion to authorize the CEDC to sign an employment agreement making Jonathan Spampanato our new president and CEO. So,
Second.
all in favor?
Aye.
Anyone opposed? Motion was carried. Congratulations.
Thank you very much.
Includes John's resume, and we'll go out to the media and
Mike, with regard to it, I probably should have also mentioned, I'm sure you guys already are aware of this, but Mike is going to be thankfully sticking around for a couple of months and working with me to make sure that the most important topics don't get overlooked and get prioritized. And so the trains running. Yes.
we took the liberty of using a format that the business, the Patterns for Progress used, announcing their new president. We changed colors and some of the language. And
Thank you, Mike.
this will go, the top piece will go out tomorrow to our 3,500 mailing list. I was explaining it to Jim. If you send it out the same day as you send the press release, the Register Star feels they've been scooped, and they won't write the story. So things you learn in
Well, you probably have broader circulation than they do, so.
Okay, we move on to the loan committee. And first is the portfolio dashboard.
Thank you, Jim. We reviewed this with the loan committee last week. One of the clients has dropped off since that meeting and a new one has been added, but we'll just go down the list. Loan client A, we received word that the primary lender has foreclosed on the property in Denver. And when we learn more, we'll certainly update the board. Loan client B is 30 days behind, but we did receive a payment from them last week. Lower client C, we found out that the primary lender has seized the collateral. And once again, as we learn more, we will update forward. Loan client D, we received a payment on Friday, which brought that loan current. Loan client E is 30 days behind, but we're in touch with her and we have no concerns about that loan being repaid. Are there any questions on the portfolio? Thank you.
Is there a motion to accept?
Second.
All in favor?
Aye.
Anyone opposed? Motion is carried. Now we have a series of loan requests, the first of which is the Grains of Paradise.
Good morning, everybody. So this is Grains of Paradise Trading, a retail establishment in Catskill. Their request of us was $27,500, which will amortize over 60 months at 7.75% interest with a monthly payment being $554.32. The purpose of the loan is working capital. And our collateral, of course, being a lien on the business assets and the personal guarantee of principal. This is Grains of Paradise in Catskill.
And as you know, we are the SBA micro lender intermediary for Columbia and Greene County. So these funds would come out of the SBA portfolio.
What is this business doing?
This is a spice and home goods store in Catskill on Water Street.
With $1 a month lease.
With
With
$1 a month lease.
$1 a month, please.
And things well.
No, the,
Other questions? Is there a motion to approve?
is it in the blue space or is it a different space?
Pardon?
Is it in the space where Willa's was or?
That I'm not sure.
I don't know.
Oh, okay.
Is it, sorry, yeah, I'm wondering if it's
In that building somewhere.
retail and online, or are they building an online presence, or?
As far as I know,
Just- yeah.
just retail.
Okay,
Strictly just.
just curious. Yeah.
Make a motion. Second.
All in favor?
Aye.
Anyone opposed? Motion is carried. Bren?
This was recommended by the loan committee, with a contingency that we have an additional guarantor. I reached out to the client twice about that additional guarantor. I have not heard back. And so we're not moving this one forward until we have better communication from the client.
Based on the stuff I saw, that's wise.
Yeah. Who's gonna say? Then we'll go on to the Friends of the Public Square.
Very good. Where this one was recommended
Go ahead.
by the loan committee, with another contingency that they, receive additional bridge financing, and we haven't heard on that yet.
Basically, you'll recall that this board did approve previously participating by providing $100,000, basically a line of credit to assist them with respect to grants that they had received relating to the improvements that they proposed at the city park. The grants that are available are generally reimbursable grants, so not-for-profits have a difficulty attempting to get the work started and without some kind of upfront cash that allows them to spend money, submit the bills, and get reimbursed. As you'll recall, there were several grants. There are 2 grants through the state legislators. Senator Hinchey did 125, Assemblymember Barrett did 125, for a total of 250, which is being administered by the New York State Dormitory Authority. They received a $500,000 grant from state parks. They received a $250,000 federal grant through Congressman Riley. And they also have $50,000 that they've raised on their own. There was a meeting that I attended with Mayor Ferris and representatives of the Friends of the Park, as well as Jess Wellens, who's the executive director of Hudson Development Corporation, where there was an ask on the part of the city that HTC provide a $250,000 line of credit as well. The thought then would be that they would have $400,000 cash, their 50, our 100, and 250 from HTC. And that would give them the ability to spend the initial 250. And what we indicated is one of the other conditions of what we're proposing to this board for approval is that our 100 would be secured by the $250,000 dormitory authority grant. So the theory would be that we would have a specific, we wouldn't be pari passu, where we're secured by a pot. We're secured by the specific grant from the 2 legislators. And we felt that that would get us in and out quicker and also not confuse or dilute in any way anyone else that they had engaged to provide the funds that they use grants as guarantee. So they would not be able to use the government equity grant as collateral for any of the other loans. We have not heard back from Jess Wellens as to what their board's thought is. But again, when we first did this, they came to us and I said, you should go to HTC first, because HTC is the city's economic development entity, only because I felt we didn't want to be in a position of appearing to overstepping our role. And HTC's board came back to us, their chair came back to us and said, please go ahead. So that was 2.5 years ago. I don't know whether their position has changed, but I don't think anyone at the table felt that they should proceed with this project if they only had 100, our 100 and their are 100,
Yeah.
and they're 50. Because you wouldn't be able to get reimbursed fast enough to keep the work going. The city is going to be responsible for demolishing, getting the site shovel ready for the improvements. That may have to be delayed because the city and Public Works Department were only in a position to do that work if they could have done it in June. Because once July comes, they have other work that's scheduled with paving and other city public works improvements. Also, there was some delay in the sense they had to go out and rebid the project after their architect or park planner changed the scope to scale it back so that it could be done in different phases. Again, I think it's important that we show partnership and leadership and that we not step back from what we had previously approved. But as Martha points out, our earlier approval had expired. So it's necessary to bring it back to this board. And it is contingent on them receiving an additional $250,000 of loan proceeds to be able to have $400,000 to move forward with the park. So they would use our 100, then we get that back. The theory was they would come to us for second approval to use 100 again, get it back. And there'd still be $50,000 left in that pot, even after they paid us. And then they would use the other pots to start the same kind of reimbursement process with Congressman Riley and with our department, our Office of Parks and Recreation. Convoluted, but I think we've done this in Philmont with Sally Baker several times. We did it with HDC when we loaned them the $200,000 that they needed to buy the CAD property. And you know, we are looking at $1.5 million available to lend.
Yes.
And we are charging 5%.
Yeah.
Which is kind of our not-for-profit rate. Any questions for Martha?
I was just curious who's doing the grant administration for them.
So question.
I mean, having done many of these grants, having.
I
two of
think
them
they're
active
using
at the
their
moment.
consultant. I think they have her name.
Starway does.
Yeah.
Oh, so the landscape firm is doing that.
I'm guessing because the Bob's doesn't have any capacity at all.
Yeah.
You know,
That was an issue when, you know, because we know them and they came to us and asked how you do these grants. And I said, you know, there's no such thing as free money.
we actually did the $500,000 grant for parks.
Right.
And unfortunately, the first time they applied for it, there were some computer issues and not unlike a previous project out in when they pushed the button, they thought they had submitted it, and in fact, it hadn't been submitted. I think we all tried to get the deputy commissioner to waive the error, but they had to reapply. It's the right thing to do, but we need to monitor it carefully, and if others aren't at the table, we really shouldn't have to step up.
I mean, I think it's a great project and, you know, to be able to bring the project to fruition will be a real benefit to the city, but just, you know, there's so many technicalities and they're just a fledgling group just created to do this project, so it's.
I really give credit to the mayor's office. The mayor really made it clear that he doesn't want the park ripped up for 4th of July on the 250th anniversary of the country and a fence around it for 6 months because it did his part and the funding sources weren't available to do their work. But I think you don't have to be the naysayer because I think there's real leadership at the city's level to make sure this is done, but it's done right.
Other questions or concerns? Is there a motion? Motion to approve. Second. All in favor? Anyone opposed? Motion is carried. On to Lord's Hollow.
Actually, that loan was under $25,000. It was approved by the loan committee and it was a $15,000 loan at 7 3/4. So that one is moving forward.
Thank you, Martha. Steve. Okay, we have a proposed loan partnership with Hudson Development Corporation. Mike?
Thank you, Mr. Chairman. As you'll recall, almost a year and a half ago, Hudson Development Corporation came to us to tell us they were going to get into the loan business with the $3 million that they received from the sale of CAS property, and would we manage the program for them? And we said that because 40% of our loans are from the city of Hudson, and and we would lose 40% of the interest that we earn on our loan fund if we managed it for them for a fee. Because we want to be able to, they would get the interest because it was their money. And then, so what we came up with as an alternative, as you recall, and again, in an effort to be a partner, not to be in a position of just saying no, was a plan where we would allocate $250,000 of our loan funds for a special program that they would market, and they would initiate contact with additional businesses in Hudson, and they would refer them to us for underwriting, funding, and administration by CEDC. I offered them in consultation. I think we had some discussions here at the board with Martha and I sat down and we decided we would be generous. We'd offer them 25% of the interest earned on the loan, but we would get a $250 administrative fee up front, closing costs. I believe that so we put this program together with and we refining it with them. I think this is the most recent 3-page document that we had discussed with Jess Allen. Again, because of a holiday, I was out part of last week. I didn't get an update from her as to where they are on this. But if you look at there's a 3rd page of the document which shows some numbers. So what does this really mean for CEDC? If you look at the top of the page, and thanks to our board chair's continual suggestion, put a page number on it. At the top of the page, it says Hudson Development CEDC Loan Program, page 1. If we were not to engage them in this initiative partnership, and we did $250,000 of loan at 7.75%, we would over 5 years, the interest would be $52,000. If you go down and flip the page, you'll see that we will basically, if you take the $52,000 25%, they're going to get 13,000. So if you go down and look at the second chart on page 2, you'll see that 12.9, they're basically getting 2% of our 7.75%. And we're going to be getting 5.5. But if you go and think about that, it comes out to 6% if you add back in, if you go to the first page, the $250 in fees. If we're going to get a $50,000 fee on 10 loans, so when you add $2,500 back into the interest earned, we'll get the 36.5 plus the 2,500, we'll get $40,000, which gives us a net effective rate of 6%. So again, we're not sure how it'll work. We've done this in the past where we said we're going to do $250,000 loan program for manufacturers or new loan program for small retail in an effort to market. And whether the money was absorbed for that purpose or not, it didn't really matter because we had more than $250 available to lend. We're not sure how this will work. in terms of how much volume they will add. But again, we are giving up something, but it's better than having them compete with us and lose the $52,000. It would be pretty difficult to start a de novo loan fund from scratch, but they are sitting on $2.5 million. I've been asked by Saratoga County and Ulster County to have Martha and I teach them how to set this up. But they were saying, well, we'll put up $500,000. You can't effectively and efficiently run $500,000 loan program in a small county or city entity. It took us 11 years to get up to the $4 million combined portfolio value that we have, totaling the outstanding loans and the money available to lend. So I do think it's, again, I'd like to ask Martha for any of her comments, but I would like to ask you to approve this again as an effort to show partnership and collaboration, as we did when they had $10,000 in the bank that they wanted to buy the CAD property. And we loaned them the $200,000 to do that. I think it's important that you know from my background and our experience together that partnerships and collaboration sometimes are worth a couple of $1,000s or a couple of points on loans. Any questions? Or Martha, did you have any comment?
I think it could be a positive relationship. Our hope is that they will bring some clients to us that might not know about our loan program. And so we'll be making additional loans in the city limits, and I think that's a positive for both organizations.
That was the point I was gonna raise, is that these are gonna be documented loan applicants coming from HDC. So in terms of the lending we're doing in the city of Hudson on our own programs, that's not gonna change. Right, so it'll be interesting to see what new business we get, but this is gonna be in addition to what we're already doing, which I think kind of lends itself to that partnership.
And those of us who are real estate brokers, the agents in the room, you know, there's going to be an issue. Well, they were my client, or they were. But we'll figure that out. And again, it's more about the partnership and the relationship as they get back engaged in efforts as we have with the chamber, as we have with the Hudson Business Coalition, as we have with the various business improvement organizations in the villages and hamlets throughout the county. It's important that, we become partners, and when you work on a project together, it's helps build the trust that you need to sustain those partnerships.
Mike, is there any plan to review this process, like at a certain point in the future, or we're just gonna see how she goes?
When they run out of the 250, we'll be happy to see if it was a good deal or not. If it all goes in the first 2 weeks, we might slow it down.
Will loans go through the same process
Yeah.
of a loan committee?
Right, and we have final say on whether the loan,
Yeah, we're essentially just white labeling
Right.
our regular
Yeah.
process.
But an applicant goes to the HDC to
Well,
initiate the process.
they'll have a link on their website where they, several of our competitors, or we have competitors, or several of the people who do this in other counties, let's put it that way. You get a loan application by filling out a form of interest, and that, goes through SurveyMonkey to us, to the email address, and then you follow up. So, they'll have something on their website that if someone signs up or they send us someone's name, we'll lock it in. I think that I meet with Jess probably at least, this is becoming a habit, 2 times out of 3 weeks. So, we're and Martha has served on the HDC board in the past. We have a very good working relationship. They're going to take over Winter Walk, and I again committed our $2,500 sponsorship. We only sponsor Winter Walk and the county fair. All other not-for-profits, we thank them and suggest to them that our supporters and grant funding and county money comes to support our mission, and it's not for us to redistribute it to support theirs, but we thank them and offer them our support and encouragement and co-marketing. But we could go through $50,000 a year in requests for donations from other not-for-profits. We felt the county fair and the winter walk were economic development driven by a number of people that are active.
Under next steps, there's a reference to Jan, Andrew, and Jess, who are they?
Board members of HCC, and Jeff is their executive director.
Where
This is really an internal document.
we have a draft press release. We don't want to interfere with our other media, the function media this week.
Other questions about the loan partnership?
Has HDC agreed to the structure?
Jess has, she was presenting it to her board, there may be modifications, but if they're ministerial or within the realm of management, we would not bring it back to you, but if they're significantly different, we would.
Is there a motion?
I'll make a motion.
All in favor? Anyone opposed? Motion is carried. Next is the CEDC Loan Reserve Fund. Mike,
As you know, when I first came, there was sufficient funds in our bank account that I was concerned that the county might look at those and say, why are we giving them $460,000 a year? And we had very little funds in reserve relating to the CEDC loan fund because there was no requirement to carry cash collateral, where on the SBA loan program, we carry 15% of the outstanding balance of cash. So we had board authorization to create a $200,000 board directed reserve fund. As you know, we've had several discussions over the last several months about cash flow, particularly in light of the fact that the SBA now owes us for first quarter of 2 quarters, right?
Yeah.
They owe us December and March.
Correct.
And I'll ask Martha in a minute to give you the reason why we're really looking at this. You had authorized me to be able to use monies in those reserve funds up to the amount that we were owed by the SBA. I hate to dip into reserve accounts because once you do, it's almost never really put it back. But Martha has some really good news from the SBA, even though they don't pay us on time. That news is.
We have been approved for a $450,000 technical assistance grant starting July 1st, which is a significant increase from previous years.
fantastic.
Now, what comes with that means is that perhaps we'll even be further delayed cash. We have talked about the fact that over 11 years, we have not taken any funds out of the interest earned on the loan fund for administrative or operational purposes. What Martha and I are proposing here is that we take the 2026 interest earned, which to date is $51,000, plus the projected earnings of another 100. So we would take $150,000 and move it to this reserve fund. So that now we would have a $350,000 fund that we could use to borrow against if the SBA was late with now going from a $70,000 a quarter payment to $115,000 a quarter payment. And I think that it would be board control. The resolution would provide that management would have to come to the board for release to use that fund, those funds. And it would be understood that those funds would be replaced when that check came in from the SBA. But I think that it's terrific that we're going to be getting 150% of what we've been getting from the SBA. But if we're having trouble managing cash flow with getting that $70,000 a quarter, I really was banging my head as to how we could create something. I don't think it's appropriate for us to borrow from our own loan fund. I don't think it's appropriate for us to take interest from our loan fund and use it for operations. But this is really, if the SBA started paying on time, we would just move this money back into the loan fund. Or make whatever other decision the board would make at that time. So, what we found is other organizations like ours, we do get paid by the SBA, so we don't take an administrative fee because we're being compensated. We don't take an administrative fee for running the county side of the loan fund. But we felt it was important to build the loan fund up to the $4 million level that we're at, so that it is a standalone, self-operating, cost-effective, efficient entity. But this would really, instead of reserving the money in the loan fund for future loans while we're sitting on $1.5 million to lend, it would be allocating these funds for security of the loan fund, which if we didn't need it, you could put back into the interest back into the lending pool. I just was worried that we run about $100,000 a month with a $1.2 million budget. And we were down to $22,000 without touching the $20,000 reserve. I mean, there were a few, if you're Sodexo, maybe we don't pay you as quickly as we would pay the luncheonette that we got donuts from, but we do manage cash flow, but yeah, I do think it's a responsible way to handle funds.
Mr. Treasurer?
Can you summarize exactly what it is you're trying to accomplish with this, Mike? So we've got
Well, right now,
million and change on the balance sheet in cash.
Right.
That is otherwise earmarked as part of our CEDC loan program,
that's money that's
waiting to be lent.
Right.
And you want to move,
We have a $200,000 account at Bank of Greene County, which is called reserve fund.
okay,
I want to put the interest earned from 2026 in the reserve fund.
which is in the bank right now.
It's at the Bank of Greene County.
Yep.
So you'd have 350,000 to be used at board, with board approval, to fund cash flow while waiting for SBA reimbursement.
And with respect to the technical assistance grant, how much of that stays with CEDC to cover our costs?
So all of it.
Versus goes to partners that we use to offer technical
We do about
assistance to
70
these businesses?
$75,000 to $80,000 under the new budget for
Just over 50,000 actually.
Now.
For that we pay our outside consultants.
Yeah.
And just a reminder, every time we draw down money from the SBA, we do have to match 15% of it. And the SBA does allow interest to be pulled out, and in fact, they do allow it to be used for operations, which is not our plan, but that is allowed under the effects.
And the fact that we have, this money would come from interest earned. It would not come from the monies that we currently have in our loan loss reserve accounts, which are, what did we decide, $80,000 more than we're
Yes.
supposed to, which if you divide by 15% allows us to draw down another $750,000 from the SBA without having to come up with money to fund that.
Yeah.
It's just,
And just one final question, you talked about the reserve being built on 2026 interest and potentially future interest?
no, just 1 year. The board wanted to do it in the future. Board might decide if we didn't need it, we could put it, you do whatever you want with it.
So all the money's on the balance sheet now waiting to be lent, we're just gonna move it over to our reserve account, so it won't be available to lend, but we're saying it's okay because we've never paid ourselves
Right.
from the interest we've earned on the CEDC loan fund.
Right, and in essence, we're saying at this point, it's a reserve account for the CEDC loan account. Now, we're not gonna take it as, we're earning,
Cash flow management.
yeah, because we're gonna report the income when the interest is paid by the client. We're not gonna just transfer the balance over. And I think, the other aspect, is that when you're looking at this, most of the other organizations that Martha and I work with that are not SBA loan funds, they've been using the interest to run their organization,
Yes.
and that's not our purpose here. It's just so we don't come to you and say, we need board guarantors of a personal loan at KeyBank, of a business loan at KeyBank, because we can't meet cash flow.
Yep.
And I don't like going to the county and asking for an advance on their monies, because it make them a little nervous, and B, what do you do in the month you expected to get their cash? So.
But again, money on the balance sheet accumulated over time, waiting to be lent under the CEDC loan program.
We're only reducing that by the 50,000 that's been paid to date.
Okay,
Quarterly, we will move it over into that account.
so it is future earnings that are gonna be moved over into the reserve.
Twenty
account.
twenty-six.
Okay.
Earned in 2026.
Okay.
Has Andy looked at this to?
Yeah, no, it makes
You're,
sense.
you're good?
Yeah, it makes sense.
Okay,
I think it's,
I think what it's doing is it's institutionalizing what we need to do if there's a cash flow issue, looking at it in advance, so that isn't suddenly a discussion we're having at this table when we need to move the money.
right,
Right?
okay,
It's like, okay,
Okay.
we have the money here,
right,
we're gonna set it in this reserve fund.
before we're panicking.
Right, I mean, the feds are saying they're supposed to be making payment, but what does that really mean? So let's be ready in advance, so we know exactly where it is in a defined space. And as Martha said, this is interest you've earned, you're entitled to use it. You're not going to, but you're gonna set it aside in case you do.
Okay,
That's really the
And
best.
to
way
your
describe
point,
it.
Mike, other similar organizations are using the interest earned for operations. CEDC historically has not used the money we've earned in ways we're allowed to.
right,
We've
For
just used it to
operations.
grow the loan fund,
Yep.
and we're just taking a
Yep.
little bit and.
we're holding it for
We're
future,
holding it. but it's
Yep.
there.
and I do think that. You know, it ties into the fact that we have simply been leaving the interest in the loan fund as it comes in to relend, rather than acknowledging that it's our money and we can put it where we want to.
Yep.
So,
And even in this instance, we're not properly spending it for operations, we're just reserving it for future need.
and you know, I've been
Cash flow
bringing
wise.
this up for years about someday having to use it for operations, and I didn't want to do that, and this seemed to me to be a way to.
Reserve it.
What do we think? What are we talking about here? It's like,
Essentially
okay.
generating our own line of credit
Yeah.
from income earned and not spent.
And Martha and I discussed it, I think it'd be inappropriate for us to borrow from our own loan fund, which probably could, but it wouldn't look good.
Give it a quick
Certainly
deal.
couldn't do it with SBA money.
Brian, can you make the motion?
Motion to approve the moving the monies from our CDC loan fund to the reserve account.
Is there a second?
okay.
All in favor?
Aye.
Anyone opposed? Motion is carried. Thank you, Mike. Before we move on to the next topic, I realized that I didn't give Victoria an opportunity to introduce herself to Jonathan.
And
Victoria?
Derek's up on there.
Hi, Jim. Hi, Jonathan. I'm Victoria Walsh. I'm the president of Columbia Green Community College. Welcome.
Thank you very much. It's a pleasure to meet you.
Good to meet you.
Thank you, Victoria.
And I'm Derek Grout, distiller and owner of Harvest Spirits in Glacier, New York.
Very good. Nice. I think I actually met you last, I think the chamber had an event a couple of weeks ago out at your shop.
Yes.
A couple shots out there, yeah.
Good to see you.
You too.
Thank you. Okay, and now for the president's report, our Lifetime Achievement Award winner. Mike Tucker.
Self-promotion, that is fine. I'm gonna go quickly through the financial statements. If you take the balance sheet, and turn to the flip side. Our total liabilities and equity are up 357,000. The main reason is cash is up 600,000 and our liabilities, to the SBA are up 400,000. So, our balance sheet, absent, net income is very stable based on our SBA, and one fund transactions. We'll do a more thorough report, with, Jonathan at the, in the July meeting at the end of the quarter. On the, cataract, and you have to keep going back and forth here. On the P and L, we're $22,000 over budget in income. We do expect, what you don't see here are the budgeted items for, the two IDAs where we would get 10% of the fee up to 25,000. We're about to close on the Bruce project up in Kinderhook. that'll get us, an opportunity to pay us for the deferred IDA fee that we deferred to the county because they didn't have the cash. So we get about $50,000 out of that transaction. So, you know, there are some timing issues that will certainly by July show us more than $22,000 over budget revenue. On the expense side, we're down $73,000 in expenses, primarily because of $50,000 in employee expenses. Because we had budgeted for our CEO to start sooner, and we have not yet replaced our housing coordinator, Chris Jones, or our administrative assistant, Riley Warner.
Chris Brown.
Chris Brown, what did I say, Chris Jones? Yeah, we hired her too.
That's a new one for her.
And Chris is still on contract with us through Patterns for Progress for 25 hours a month. Keep the supervisors from thinking that we weren't going to replace him. I think, you know, my theory was it was best to wait until a new CEO had been hired to replace both of those positions rather than me hire someone and find out that the new person was not hired those people. So we have 2 new people for you to hire. We're ready to send out the job descriptions after you review it. It's been reviewed by the 2 co-chairs from the Board of Supervisors from the Housing Task Force. So because of you know, other areas where we're down on revenue, or down on expenses, we are $73,000 under budget on expenses, 50,000 of it which is payroll. We did write off $7,758 as bad debt. It was not bad debt. It was to reconcile our books with the down home QuickBooks. And we've been working on this for several years. And the good news was our books were overstated. The QuickBooks, or the down home software, which we monitor the loan programs, interest and expense, was higher. So we had to reduce it on our books to be able to get them in sync. And it wasn't worth spending, you know, $5,000 with an accounting firm to do the forensic counting to figure it out. But we're that we're even, we can monitor very closely.
We're doing it quarterly. So we won't have to.
So I think we're in good shape. I did review the budget, so I can go over it with Jonathan, so that you know, I don't like to change budgets. I'd rather report variances to budgets. But I did look at, you know, where we are in terms of where we thought we would be now, and with expenses and revenues anticipated, which, you know, may be higher or lower than we thought back in October. We can give Jonathan a pretty clear picture of where we will be for the rest of the year. Any questions on the financials?
Motion to approve the treasurer's report.
Second.
All in favor?
Aye.
Anyone opposed? Motion is carried.
Very quickly on my president's report. We have a county economic development committee meeting this evening. We have 2 resolutions that we're proposing for approval by the committee for recommendation to the full board. We had an inquiry from Columbia Tent asking if there was any way we could expand their site up in the Commerce Center. Primarily because they were we had notified them that they were storing equipment, materials on our property. The property is owned by the IDA. So I contacted Crawford. They looked at it, and by enhancing no additional road frontage, but enhancing the perimeters of the existing lot, we can create a 2.5 acre parcel for them. They're subject to FAA approval because it is in the flight plan, but county engineer tells me what they're proposing should not be an issue. But it would be $65,000 sale. and the county, board of supervisors would have to approve selling it, to the IDA, transferring it to the IDA, even though it's the title company likes this. And then they would transfer it to us, then we would sell it, and then they direct that the IDA gives the proceeds to CEDC for future economic development, direction. It's how we've done all of the lots at the Commerce Center, but, you know, they're not getting any additional, road frontage. And it's just basically, you know, going on the three sides of their property and giving them 20, 30 feet and allowing us to get $65,000 that we wouldn't otherwise be able to get because it's not a parcel that could be sold to anyone else. It's not a contiguous parcel. We recently had approved a contract for a 2.5 megawatt solar project in Stockport. We manage those for the county under 5 megawatt solar projects. Anything above that, the Board of Supervisors have directed us not to assist them without the direction of the individual town. When we do that, we're now charging $8,500 a megawatt, split 50% between the school district, 25 and 25 to the county and town. We usually get them passed first, but we don't have the chairman sign them until the school board and the town board have approved the agreements. So that we're not out ahead of those entities. We are also have been asked by the county to assist them in the sale of 610 State Street, the former Hudson High School. As they move the tenants in that building, that county office tenants, to 11 Warren Street. I'm in the process of exploring with Andy and Rob Fitzsimmons how that process would work. And I'm also in the process at the county's request of ordering an appraisal. What I anticipate would happen is they would transfer the property to CEDC and you would have to approve that real estate transaction. And then we would market it as a local development corporation, which takes it out of the requirement of public bid. It's made probably the main purpose of a local development corporation. And you would have to again approve the sale of that property after we market it. We've looked at talking with brokers, but we want to see the appraisal first. I don't think it's going to be. I think in my discussion with some of the commercial brokers in Poughkeepsie, Newbury, and Albany, there's only one use for that building, and that's 6 upscale apartments, condos. It's not big enough to put sufficient number of portable units in, and it would have to qualify for low income or have to qualify for historic tax credits, and it could be very elegant. But you know, the building is in terrible shape. If you look up at the cupolas on in the dormers on the top floors, I mean, there's plastic flapping out of the windows. You know, I think the county had it appraised several years ago and it was around $650. And it's a 19,000 square foot building. Kind of goes along with the former library in the terms of it. So again, you'll hear more about that under John's leadership.
It doesn't have a historic designation, does it?
Not yet, so they have to get that. We talked about the loan, we talked about HDC. Martha, Steve, and I are applying for another micro enterprise grant through the county. They approved that last month. We held a public hearing that we were requesting $600,000. Previously, we asked for 300, and they renewed it with 300. That allows us to give small businesses
up to $25,000 grant.
Up to $25,000 grants. And the requirements are 5 or less employees, where one is the owner, not including the owner,
including
the owner.
Yeah.
One or two moderate income employees. And it's a great program. We've done $600,000 in that program already in the last year and a half. You have to point out that yesterday came out the microloan program numbers for October 1st through April 30th. That's 2 quarters. CEDC did 16 microloans totaling $353,000. Out of 43 done statewide or in region wide and 727. So we did 50% of the microloans in the upstate Syracuse SBA region. So congratulations again, Steve and Martha. We also worked with the county fair to assist them in getting we're going to be the grant recipient from Congressman Riley for a grant, $350,000 to $500,000. Remember, Congress, as you know, gets $10 million to give out as earmarks. I think they call it community assistance grants. They had hoped to get a CFA. I'm sorry, the fair itself had hoped to apply, but the House Appropriations Committee said no, not for profits this year. While we're a not-for-profit, we're also a local development corporation and we qualified. So the Congressman's office called me and said, would you be the applicant? Jim and I talked about it and it's a pass-through. They wanted the IDA to do it, but the IDA is not allowed to make grants. So if the grant was made to the IDA, it could accept it, but it couldn't pass it through to the fair. So again, we move quick, but when people ask us to do stuff, we try to find a path after consulting with board leadership. Finally, I look forward to the transition. This is my last board meeting as your president and CEO. You know how John starts on June 15th and will preside at the with leadership at the June 28th or 9th, maybe 30th board meeting, whatever it is. As you know, you've been gracious to allow me to stay and work through the transition. That runs at this point through the contract runs through September 30th. And we are looking forward to being the special projects coordinator or consultant, whatever John's title would like it to be. We've already started exchanging information and data, and I'll try to he'll be drinking out of the fire hose for the first 90 days. And I look forward to working in support of his efforts. And as you know, I've had a very illustrious career, a real estate developer, lawyer, licensed broker, registered lobbyist. I worked in the private sector, I worked in government, I worked in not-for-profits, but this has been one of the highlights of my career. I think because you allowed me to do what I do, and if you didn't like it, I kept doing it, and you all thank me. So thank you very much.
Thank you, Mike. Okay, can a motion to approve the minutes of the March 31st meeting?
So moved.
Second.
All in favor? Anyone opposed? Motion is carried. No one from the public here to hear from. Upcoming meetings and events, Monday, June 8th. Part of our membership of the chamber is a horseman golf tournament, which is Monday, June 8th in Copic. We have Steve, we have Rachel. Are you in on that, Amanda? No. If anybody's interested, we've got 2 slots. See me after the meeting, please. Tuesday, June 9th is the executive committee meeting. June 15th is Jonathan's first day, or a big banner up outside the building. June 22nd is a loan committee. June 30th is the board meeting. I'm going to be away for a couple of weeks, June 22nd to July 3rd. So in my absence, Tara will be presiding over the board meeting in June. Any other comments, questions, criticisms, or complaints? Hearing none, I'll entertain a motion to adjourn.
So
Second.
All in favor?
Aye.
We're adjourned.
Congratulations. Yeah.